Hi, this is Adam Hewis, and I'm coming to you from the Market Club's digital studios, and we're looking at a stock that we looked at earlier, but we looked at it in a negative light. And the stock we're talking about is Starbucks. You can see here's the symbol. It's a daily chart of Starbucks. And as you can see, we're right around the 40 level, and then we've come all the way down to present level around 1568. Now, what I want to show you today is how we found out before about it, and you can watch our earlier movie on Starbucks where we actually shorted it, and then you have a chance to see why we're looking at Starbucks in a different light today. So let's take this off the screen. This is a classic pattern. We've shown you many times before. A double top, pivot point. You measure from here to here. It gives you a target zone. This is, let's say, from 30 up to 40. Gives you a target zone down to 20. And that was the target zone that we had. Obviously, the market went a little further. And that's fine. Nothing wrong with that. Let somebody else take the money on that. But we're using a very powerful tool, probably one of the most powerful tools in your arsenal as a trader. And this is what it is. I'm going to take everything off the screen. I'm going to get closer in on this chart because I want to show you this exactly what we're looking at. And that's going to do it right there. I'm going to take one of our trendline tools out of Market Club, and we're going to draw a trend line and show you exactly what's going on. Now, this is what we think is really important. Now, with a classic trend line, and we have a classic trend line here, is it has to touch 3 points. 1, 2, 3, 4, and the breakout was right here. Now, if you look at this, you're talking about a trend line that goes all the way back to the December period, November period of 06. Okay, so you're looking at a substantial amount of time that Starbucks has been in a downward trend. So what's happening now? So let's get a little bit closer, and I'm just going to take this off the screen, and I'm going to scoot this in, and look what's happening. We've had some huge down days in the market, in the Dow and so forth, but this has not made new lows. We made the lows back in July, but this market is basically starting to do this, stabilize. Okay, so let's take this off the screen. We have the breakout right here. This is right around the 16 level. The market's trading at 1564, and it looks as though it wants to eventually move back higher. Now, will it get to $40 again? Probably not, but certainly we can look for higher levels. This is going to be an area of resistance right here, 1850. So it's not the biggest move in the world, but it could be a very good move given the markets that we're looking at. So let's take this off the screen again, scope this out a little further, and let's see how we could get maybe a higher count using our Fibonacci tool. We've used this before. This is a tool that shows retracement. So you click on the top, and then you click on the very, very lowest point, and it gives you retracements like here, 2351, 2657, and 2962. Certainly, on a longer term basis, we could be looking at 26, possibly this level short term, but certainly the 1850 level in the very, very short term. Now, we want to see some things happen, and I'm going to show you exactly what we're looking for. Right now, we trade with trade triangle technology, so I'm going to take everything off the screen, and we want to look at a monthly chart because that's how we look at markets in the stock market with our monthly triangle. So let's just say yes, monthly. I'm going to convert this into a candlestick chart, and we'll scope it in a little further. These are our monthly charts. Now, what you see on the monthly charts right here, 3365. The market has never given us a buy signal on our monthly charts. But what I want to show you now is exactly what's going to happen. And I'm going to take this off the screen. And as you can see, we have 1 month, 2 months, and this is currently September. Now, the high period right here is right here. And that level is, I'm going to show you exactly, because I can do that using Market Club tools, and I'll pull the tool right into the picture for you. and the high on that market is 1718. So that's the key area for Starbucks, 1718. If we go over this area, so let me just put this out. So 1718 is the key level for Starbucks, providing we don't go higher this month. But if we stay pretty much in this range bound right in between these 2 points for the rest of the month, then there's a good chance we'll see this market move higher. As you can see, we've been moving sideways for the past 3 months or 2.5 months, and that's normally what happens when a market's beginning to make a change. So let's take this off the screen. So again, we mentioned 1718 is going to be our real key level to look at. We're going to look at our weekly charts now. And our weekly charts are sort of all over the place here, but again, you're looking at this 1718 level really here. We're still in a negative mode, but the difference is we've been going sideways for, let's just count the weeks. Starting from here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. So from these point here, we've had 11 weeks. Now we may still go further, but the reality is it looks to me as though this market has finished on the downside, and we're going to see this market turn around and go higher. The big clue to me is the break over the long-term negative force line, that downtrend line I showed you earlier. That to me was really the big one. And if we take this out even further, and I'll scope it in just a little bit here and take this off the screen, you can see this is a very big line. So this is again the pivot point, which is the 1718 level. If we move over there, I think we'll see this market move back up, certainly to a higher level than we're seeing right now. But I think if you were to be a little bit aggressive, you could certainly maybe start to accumulate positions in this. The risk is not that big. I would not be happy to see the market take out this level right here. I'll show you what that level is. I don't think I would be happy to see the market take out this area here. Went down here, I'd say we're looking at more basing action. So the risk is not that great, and the potential is for a move. I think we could see 1, 2, 3, 4, 5, 6. I would measure it from here to here, 6, which is 1720, down to 1480, which is 240. So we're looking at probably the 19 to 20 level on the upside. So this is Adam Hewison for Market Club, looking at a stock. I love the coffee. I'm beginning to like the stock now.